Hello. In this video, I wanted to talk about the psychology of trading. And this is going to pertain to, I'm going to say 80 to even 90% of traders. Whether you want to call them a retail trader or whatever, it's more so that group of people who have yet to learn a lot of important lessons that the market sadly teaches everybody. There's really no way of escaping. And what these lessons are just important rules and things to follow, rather than try to assume that you understand what's going to happen. So let's just kind of go through. This happens to be Apple. It's a 3-year daily chart. I went back 3 years because I wanted to, especially around earnings, I wanted to kind of show some interesting stuff that happens and some interesting psychology. So what we're looking here on the right-hand side, it looks like it's around September of 17, so a year and a half or so ago. So imagine if you're in this area, maybe you're long and the stock just rallied. It went from 142 up to 165, pretty decent move. So it's you've survived this little decent sell-off. Granted, it was one day and then a big huge spike on earnings. So you're feeling pretty good. And these little sell-offs, you're feeling okay. Here comes another little sell-off. So once again, you're kind of feeling okay. Couple more sell-offs. Maybe you're starting to get a little bit nervous. You're not quite sure what to do. Some traders are thinking, "Hey, this is a great pullback. If it was at 165, I can buy it for 158. That's a huge opportunity." So some traders are piling in. Some are just unsure what to do, but they're going to probably hold on to those longs, go a little bit more, and now all of a sudden we're starting to have some more sell-offs. So maybe somebody who thought Apple was a good buy here didn't buy, but now they're like, how can I not buy at 150? So maybe they buy at 150. There's other traders here that are just really nervous. They're not sure what to do, so they might just let go of the stock. They just can't stomach losing money. So there's a lot of emotion going on right now in this chart. Let's look a little bit more because we got another earnings coming up. Let's go a little bit more. So looks like the selling kind of settled off. Some of those traders that sold here are really mad. They feel like the market tricked them and the stock's starting to go higher. So there's a good chance the people that sold here bought back here. So there's a loss right there in the sense of, they got out and they got out and got in at a higher entry price. Obviously not something that you want to do. So let's just kind of keep looking and see what happens here because, again, earnings are coming up. Now, let's say, for example, all of a sudden these people, maybe they got out and they didn't buy back yet. And then earnings came and Apple had a huge pop, massive pop. So you went from the close at 157 to, call it 7 days later at 175. Huge move. If you got out here, you're really cursing yourself. Think about it. You sold here. The market only had to go, $3 or $4 lower, about 4% lower, and then it just spiked up and ripped your face off, as traders like to sometimes say. So you're not sure what to do at this point. Do you chase it? You're starting to read bullish reviews about how maybe Apple's going to 200, 250, whatever the number is. But I know those forecasts were coming out and you're really nervous. You're just not sure what to do. So, you see, maybe this sell off here, but odds are a lot of people started to chase the stock and maybe bought in, let's say the 170 to 175 range. So now let's look a little bit more. And all of a sudden now Apple starts to pull back. So for the people that didn't chase just yet, maybe they're going to buy it here. Maybe they feel like they got a good chance to buy. There was a gap fill. But again, there's a lot of emotion, a lot of uncertainty. If people bought here, the market pulled right back again on them. So imagine you got out here and then you chased it and bought it back up here, and then the market sold off. And you can start to really get a sense of how you feel like markets are really trying to mess with you, and they're not. It's just normal back and fills and a lot of things like that. So let's say now, for example, let me fast forward just a little bit more to another earnings. So let's say that you chased the market and you bought here. You had to wait all the way really until next earnings, and you're actually underwater now. So, you probably, if you bought here, you may have held on. These aren't big, huge price swings. Here's a higher high, so you're probably feeling a little bit better about your buy. Here's a gap down, but here's another higher high. So you're starting to feel a little bit better. But once again, this market's starting to pull back on you. What do? Do you dump? You have these lessons from over here, and you don't want to make those same mistakes again. Um, you're starting to tell yourself, well, you know what? All these other sell-offs were minor, so this is going to be minor. Well, this one wasn't minor. This one went from 180 down to 150. Pretty substantial move. So I can keep repeating this chart. If we look at it, I mean, just look at this stuff. And went down to 150, went back up to, a new high of 182 and back down. Trading this type of stuff is psychologically very, or more emotionally, very exhausting. This is a hard type of stock to trade. And I'm not going to get into strategies, whether it's call spreads and or writing calls and things like that. The point is just to kind of go through the psychology to understand kind of what other traders are thinking of that can kind of help you a little bit better with your own decision making. If there's a couple rules I can teach, which again I just want to talk psychology, but a couple rules to kind of go over. Never chase a market. Markets always kind of come back. Here you had a gap down and you filled the gap. You had some gap ups. Here's a gap up and you fill the gap. A gap up and you fill the gap. So you have to be patient. What you think, like over here, you may think like this is a great opportunity to buy, but the opportunities can get better. So let's say over here, you think like, hey, this is, it just keeps hitting new highs. And there's some sell-offs here. Like this is great. I can buy Apple at 200 and went to 235. Once again, those bullish reports are coming out saying maybe Apple's going to 300, whatever the number is that people are forecasting. I'm sure they were forecasting some bullish stuff. And then in a short period of time, what was a great buy at 200, now you could have bought it at 170. You could have bought it at 145. And, now what's Apple going to do? Is it going to push a new high or whatever? So anyways, that's kind of the psychology. That's why this business is so difficult, and managing your emotional capital is right up there with managing your physical capital. So as always, I thank you for listening, and I wish you happy trading. Thank you, everyone.